The 2024 and 2025 papers remain the most sought-after bonds, as traders at Axis Bank also expect bullish sentiments to persist on the short end of the curve today. Constance Onyia, Treasury Team Lead at Axis Bank, joins me now for more market updates. Hello, Constance. Thank you so much for joining us. And the first time to have you. Happy New Year.
Happy New Year. Thank you for having me.
Let's start off now with the overview of market activities we saw this week. It started off quite on an active note with the MPR rate hike, 100 basis points. How does this influence the market? Then we also saw the midweek auction as well. How has the market responded so far?
Okay, so after the MPR rate hike, we saw just an initial reaction in the markets. We saw market move 100 basis, 200 basis points on the long end of the bond securities, especially on the 2049s, 2042s papers. And it was just short-lived, as we then had like inflow into the system. We had fact payments into the system. We had some coupon payments into the system. And as of yesterday, market was about 1.1 trillion up in liquidity. And this affected the Treasury bills primary auction, which we had on Wednesday. We saw rates close at 4.79 on the one-year instruments, coming from 7.3 at the last auction, with a full subscription of about 860 billion in the at the auction. The bullish sentiments also continued yesterday, where people tried to buy more of the securities which they were not able to get at the auction. Yeah. So we saw this one-year instruments traded as low as 1.5 yesterday in the secondary market, and this is just as a result of the liquidity that we have in the system. On the interbank side, we have like I mentioned earlier, market is up about 1.1 trillion, and today we expect the CRR to happen across banks, where CBN will try to mop up the liquidity partially in the system. We also expect the bond auction on Monday, where the federal government is set to borrow about 80 to 100 billion on 4 maturities across board on the 15-year, 10-year, 15-year, 20-year, and 30-year papers on Monday. And we don't expect much hike in rates, seeing that we still have some liquidity in the system. So in the near term, what we see now is a bit of bullish sentiment as liquidity dries up the system before we'll probably see a reversal in this trend.
Exactly. Now, let's also talk about expectations for next week. We are starting the week with a new bond auction, isn't it? We are not necessarily sure of the volume, but about 300 to 400 million, thereabouts.
Billion. Yes, so about 300 to 400 billion should be borrowed on the first auction that we see on the bond auction for the year, where we have 80 to 100 billion on each paper to be borrowed. So we have, like I mentioned earlier, the 10-year, 15-year, the 20-year, and the 30-year papers, which are on offer on Monday. And we do not expect these rates to be as high because a lot of banks will just want to keep their liquidity safe and just take as much as they can at the auction. And because a lot of people were not able to get at the primary auction at the NTB that happened on Wednesday, we'll probably see this demand also flow into the short end curve of the bond side. And the 24s and the 25s are already in demand as of now. And then we expect that the 28s at the auction will probably just trade around the or close around the 13.5 handle.
And for investors, do you think we are going to have any surprise moves? Looking at the first quarter, this is the season of outlooks as well. Do you think we are going to see any surprise shift as investors continue to look for havens? The 2024, 2025 papers are still holding investors' interest.
Well, like I mentioned before, in the near term, what we expect is for this bullish sentiment to persist. So the surprising facts that I'll say is probably at the time the liquidity is out of the system, we might now see the MPR in effect in these securities, but we'll now see rate hike at that.